Welcome back to the cryptoworld channel, everyone. My name is Josh, and right now, Ethereum just confirms the breakout from this falling wedge pattern and also this pattern, which I'll talk about later in the video. And in just a moment, I'll be talking about the next price targets for the Bitcoin dominance and also when we could experience the next buying opportunity for Bitcoin, which I'll talk about in just a moment. So definitely stick around. First of all, starting off on the weekly Bitcoin chart, and right now the price of Bitcoin is still trading just underneath this important area of resistance, sitting in between around 36,000 to 38,000. And in case you're new to this channel, the reason why this is the next important area of resistance is due to the fact that we have previous supports back in Q1 of 2022, back around this exact same price range. And also, if you're taking a look at the Fibonacci retracement tool from all-time high down to the bear market bottom, on the linear settings, we have the 38.2% Fibonacci retracement level, which is acting as a resistance, sitting at around 36,000. And so once again, due to those different reasons, we have some important resistance around this price range, starting at around 36,000 approximately. And of course, on some exchanges on the futures market, we did actually see the price of Bitcoin go right into this exact area of resistance before experiencing a slight rejection in the short term. And if you're taking a look at the 4-day Bitcoin chart, once again, we're technically still within this larger bullish trend that we've seen since the very beginning of this year based on the super trend indicator. But if you want to know more about this chart right here, then check out my last video on the channel, because in that video, I went into much more detail about this super trend indicator and the larger bullish trend here on the larger timeframes. And something similar can be said about the 3-day Bitcoin chart. Once again, we still have an active hidden bullish divergence pattern still playing out, as I've been talking about since all the way back down here. And so once again, a hidden bullish divergence means we're due to see a continuation in that larger bullish trend with another leg to the upside, which is obviously now playing out. But anyway, getting into the daily Bitcoin chart, and once again, just over the last few days, we've obviously seen a very large breakout above this important area of previous resistance, which should now act as new support. And this price range is once again sitting in between around 30,500 to 31,500. And if you're looking at the daily Bitcoin price oscillators, right now the MACD is still showing a lot of bullish momentum, so it's very clear that the trend at the moment on the daily time frame is obviously bullish. And so even if we do see any sort of short-term consolidation or pullback, once again the MACD is still telling us we are looking more bullish than bearish. But if you're looking at the daily Bitcoin RSI, as I also talked about in my last video on the channel, this is now extremely overbought, and in fact it's gone even higher since my last video. And so once again, this means it is extremely likely that we're going to form some sort of bearish divergence if we continue to see higher highs in the price action over the next few weeks. And so obviously it's not impossible the price could go a little bit higher, because that would actually be needed for a bearish divergence. But basically what I'm saying is it's very likely that no matter if the price makes a new higher high or begins forming higher lows from here, it's very likely the RSI on the daily time frame over the next few weeks or so will start forming lower highs. And so essentially when we're seeing lower highs in the RSI, once again, we could either see lower highs in the price or higher highs in the price. First of all, if we see lower highs, obviously that would mean some sort of short-term correction. Or even if we see higher highs in the price over the coming weeks, once again, we could go a little bit higher in the price, but that would likely form a bearish divergence within a few weeks from now. And if we do end up seeing some sort of bearish divergence form in a few weeks from now on the daily time frame, we can simply look at the last couple of bearish divergences that have played out here on the daily Bitcoin chart. And obviously, both of these previous bearish divergences have resulted in a bit of a pullback for the price of Bitcoin over the next 1 to 2 months or so after the bearish divergence actually confirmed. And in fact, what's very interesting about these pullbacks that we've seen throughout this year, throughout the larger multi-month long bullish trends, because obviously 2023 so far has very much been a bullish year, a bullish trend. But even though I'm still very much bullish on the larger trend, on the larger scales, once again, during this bullish trend, we can experience pullbacks from time to time, which on smaller time frames look more like short-term bearish trends. And what's interesting about these pullbacks or short-term bearish trends is we've basically seen 20% pullback or more every quarter over the last 1 year. First of all, if we're looking all the way back during November, of course, that was to do with the FTX collapse, but we still ended up seeing more than a 20% pullback during November, entering into early December of 2022. And then ever since then, obviously the price of Bitcoin once again has been trending to the the upside in the larger trend. But if you're looking at Q1 of 2023, we did see more than a 20% pullback within that first quarter of this year, which of course happened during late February entering into early March. And that pullback was around a 22% pullback from peak to trough. And what's interesting is just before that pullback began, we did actually see a bearish divergence just before the pullback. But once again, even though we had around a 20% pullback, we still continued the larger bullish trend later on with another leg to the upside up until the next bearish divergence. And then during the second quarter of this year, we had another 20% pullback from around the middle of April entering into the middle of June. And then obviously the larger bullish trend continued later on, setting a new slightly higher high. And at that next major high, we also saw a bearish divergence on the daily chart, which I just talked about. And of course, we ended into another 20% plus pullback, which was actually around a 21 to 22% pullback in the third quarter of this year during around the middle of July, entering into around the middle of September. And so once again, over the last 1 year or so, obviously the price of Bitcoin has been in a larger bullish trend, but throughout the larger bullish trend, we have these legs to the upside and then these 20% pullbacks, which usually happen around once every quarter. And so obviously we have just seen a major leg to the upside in this larger bullish trend. Obviously, once again, the larger bullish trend is still active, and it is possible this leg to the upside might not be over. For example, if we do end up forming some sort of bearish divergence on the daily chart, we would still need to form a new higher high again in the price, perhaps over the next few weeks. And so it's possible we could continue up towards this area of resistance, sitting in between around 36,000 to 38,000 here on the weekly time frame once again. But simply based on what we've seen over the last 1 year, if this type of price action continues in this bullish trend where we see around a 20% pullback every quarter, obviously right now we are in Q4 of 2023 and we have not yet seen any major pullback during this quarter of the year. And so based on what we've seen over the last 1 year, it's very likely that we could see another buying opportunity for Bitcoin within around 1 to 2 months from now. Because once again, that gives us time over the next few weeks to form a possible bearish divergence of some sort. And then once again, in around 1 to 2 months from now, it's possible we could see some better prices. Once again, based on history, we could see a 20% pullback, but of course, nothing is guaranteed. So even if we see around a 10% pullback from, let's just say, this area of resistance, if we make it towards this area of resistance and then see around a 10% pullback, that would put us right at around 33,000 approximately. Or if we see around a 15% pullback, that would put us at around 31,000 from that area of resistance. Or if we see the full 20% pullback from that area of resistance, like what we've seen throughout the last 1 year, then that would put us right at around $29,000 per Bitcoin. And so for those of you who might have missed out on this recent pump to the upsides, then personally, let's just say if I missed out on this recent pump to the upside because I cannot give you financial advice, if I wanted to look for prices to buy back into Bitcoin, I'd be looking for the low 30,000 area, if not the high 20,000 area, perhaps in around 1 to 2 months from now. But once again, those prices are not guaranteed. So personally, I would also be dollar cost averaging a little bit by a little bit. But personally, I would not be expecting prices all the way back down here below 20K or back down towards 15, 17K like some people are calling. Personally, I would not be betting on seeing those prices again. And now, obviously, anything is possible. Of course, if we see some sort of crazy black swan event, anything is possible. It's just those prices are not very likely anytime soon. And so personally, if we do end up seeing around a 15 to 20% pullback from a local high within the next few months, once again, around a 15 to 20% pullback could be a major buying opportunity and possibly the last buying opportunity before the Bitcoin halving happening in around 6 months from now. But once again, even if we do see that pullback within the next few months, which would actually be normal price action, that will not necessarily mean the bullish trend is over, because remember, during this larger bullish trend, we can see these shorter term pullbacks. And now, if you're taking a look at the Bitcoin dominance on the weekly time frame, we can clearly see the Bitcoin dominance just recently has been skyrocketing. And in case you're new to this, the Bitcoin dominance going up basically means Bitcoin is doing better than the majority of the altcoin markets out there. And now, obviously, there's always outliers in the altcoin market, like for example, Chainlink or Solana have been performing very well just recently. But basically, Bitcoin has been outperforming most altcoins out there in the altcoin market, which is why we're seeing the Bitcoin dominance go to the upside like crazy. And this has really been happening, especially especially after we broke out above this significant area of resistance, which I talked about months ago on the channel. And of course, after that breakout, we also saw a perfect retest of this same area of resistance, confirming it as new support, as I also talked about all the way back here during August and September. And so once again, as I said back then, this is bullish for the Bitcoin dominance. This is bullish price structure, meaning Bitcoin is likely going to continue outperforming the majority of the altcoin market. And if you're looking at the next significant level of resistance based on previous support in the Bitcoin dominance that we saw back during around 2019 and 2020, this level of previous support, which should now act as new resistance, is sitting at around 57 to 58%. And in case you're wondering, right now the Bitcoin dominance is sitting just above 54%. So basically we have a few more percent to go up towards around 57% once again. And at that point, we could potentially see some sort of rejection in the Bitcoin dominance. And if that rejection is a big rejection, basically if we fail to break out above that level on the chart within the next few weeks or months, then at that stage, we could potentially see a major altcoin season, meaning the altcoins are rapidly outperforming Bitcoin if we see a strong rejection in the Bitcoin dominance from that level. But at least for now, once again, this is still very much a Bitcoin season, at least while the Bitcoin dominance is still trending to the upside. But anyway, now getting into the Ethereum part of this video, this is on the daily ETH to US dollar chart. And even though Ethereum might be underperforming against Bitcoin, it is very much outperforming against the US dollar, as we can see on this chart, because just here on the 3-day ETH to US dollar chart, we have now officially confirmed a 3-day candle close above this descending line of resistance, which was sitting at around 1.7k, more specifically around 1720. And so this technically confirms the breakout to the upside and confirms this falling wedge pattern and actually activates the technical price target to the upside, which is sitting at approximately 2.1k. And so from the point of the breakout to that price target, we're talking around a 22 to 23% move to the upside, or from the current price as of recording this video to that technical price target, that is still around an 18% move higher. And so obviously if the price does end up completing this pattern, that is a major opportunity still ahead of us. And the point of invalidation for this trade, for this breakout, would simply be a break back below this previous line of resistance, which is sitting at around 1.7k. And of course, it is also important to understand that the price does not often move in a straight line straight towards the price target. So it is very normal to see rejections along the way at point of resistance. And speaking of point of resistance, looking at the daily ETH to US dollar chart, just over the last one day, we saw a perfect rejection from this exact area of resistance, which I spoke about in my last video, sitting in between around 1850 to 1890. And this area of resistance is based a little bit on previous resistance in the price, but mostly on the volume profile indicator, showing a lot of traded volume around that price range. And now if we do end up seeing a confirmed breakout back above around 1890, then in that case, we also have this area of resistance based on these previous highs, sitting in between around 2000 to 2030. And that's basically the final area of resistance before heading up towards that bullish price target at around 2.1k. And as for support, in case we see a rejection from this level of resistance further back to the downside, we should find some support at these previous highs, which were previous resistance, sitting at around 1730 to 1750. And below that area right there, we also have some more support back down towards around 1660. And as for the daily Ethereum price oscillators, right now the MACD is still looking very much bullish. So once again, in terms of the trend and momentum, obviously we're still looking more bullish than bearish, even if we do see some sort of pullback or consolidation in this bullish trend. And something similar can be said about the daily Ethereum RSI, which obviously is still trending to the upside, forming higher lows and higher highs, meaning the bullish divergence on the daily time frame is technically still active. And as for some other levels of support and resistance on the daily chart based on the Fibonacci retracement tool from this high at around 2030 down to this swing low, we can see the golden pocket area of resistance sitting in between around 1820 to 1840 approximately, which is also previous support back here. And the next highest Fibonacci level of resistance is the 78.6% Fibonacci level of resistance, sitting just above 1.9k, more specifically around 1910. And as for support, we could find some support at around 1740 to 1760, like what we've seen over the last one day. We did actually see a slight bounce from around 1760, but if we see a break back below around 1740, below these previous highs, highs. We could also find some more support down towards around 1630 and also around 1660. And something else to pay attention to on the daily ETH to US dollar chart is this broadening wedge pattern, which has now broken out to the upside and has been confirmed with multiple daily candle closes above this resistance. And in case you're wondering, this line of resistance is once again sitting at these previous highs, sitting at around 1730 to 1740, acting as support. And that is also the point of invalidation. Basically, if we confirm a break back below around 1730, then that would invalidate this breakout to the upside. But at least for now, while this breakout is still active, while we're still trading above this resistance, technically speaking, we do have a bullish price target for this broadening wedge pattern, which, by the way, this bullish price target is sitting at around 1980, so just underneath $2,000. And so from the point of the breakout to that price target, we're talking a full 14% move to the upside, or from where we are right now as of recording this video to that technical price target, that is around a 10 to 11% move to the upside. And so if we're talking about a 10% profit against a potential 3% loss, 3 to 4% loss, if we actually invalidate the breakout, obviously that's a decent risk to reward ratio, a 10% profit to around a 3 to 4% loss. And obviously if you entered the trade with a conditional order just above the point of the breakout, then the risk to reward ratio would have been even better. And so overall, obviously in terms of the trend and momentum, once again, we are still looking more bullish than bearish. It's very normal to see some pullbacks or consolidations around these points of resistance before heading higher later on. So that is something worth considering moving forward. But either way, whether we see a pullback, a sideways consolidation, or we continue heading higher, you can still make a lot of money in crypto by watching these videos popping up right here on your screen. The video in the top left shows you how to make money if the price is bullish or bearish using AI, and the video in the bottom left shows you how you can easily profit from choppy sideways price action. But anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.